Hi, welcome to the Market Alert for Friday, the 5th of April 2019. So yesterday, the pound, we actually had some movement to the downside, but still stuck in this sideways range. Today we have some news, and one thing I've noticed, and I don't know why, but I will get it checked out. It says there is no news today, which is not the case at all. And I thought this was odd yesterday, so checked on the Forex Factory site. And we do have news today. We have the non-farm employment change figures. Last month they came in a miserable 20k, which didn't stop the stock market from going up. And the forecast is for 172,000, so they're looking for a massive bounce for the month of March. And if that's the case, then you will see the Dow moving sharply higher. So there is news today, so if it affects the dollar, then the pound will get some sort of movement. Brexit's gone quiet until Monday. It's now gone to the House of Lords, and we'll see what happens there. But yesterday, it was sideways for half of the session, then started to move lower, and eventually it broke and then moved lower as things unfolded in the House of Commons. Strange day. Maybe they didn't want to support it yesterday and let it move by itself for a while, but certainly the pound being very well supported when you look down here at the 124 level, still sitting at 6 cents higher there at 131. So we should get a bit more movement today, hopefully free movement. Meanwhile, in the Dow, continuing to move to the upside. There's no surprise here, as you will know from more or less every morning. They want the market on the highs, and that's what they're achieving. You can see how the market's moved higher this week. It's broken out and now moving to the upside. All it needs is the FOMC figures to be spectacular, and we're heading back to the all-time highs. And I don't think it's as far as it actually looks either. So from here up to here, just a ballpark figure, 500 points. There's no problem in doing that at all. It's done that many times before. When you look at some of these bars, so we could be heading into the weekend with an all-time high for the Dow, and again, no surprise whatsoever coming off those December lows there. And in the 5 minute yesterday, it was a one-way bet straight through the 200 bar moving average. The market moving higher, ran out of steam. You can see the retracement 76% here, then the market going sideways. And then as we got into the latter part of the session, we can see that US futures yuan surge as China's eye says substantive progress made in trade talks, but this is the important bit. Still no deal though. They only need the news, and you can see their stocks rallying to close. On report, Trump plans to announce Xi summit again, so it's going up on optimism, not on facts. And whilst we're here, we haven't looked at the yield this week, so let's have a look at this. You can see that it turned around and moved back. This is perfectly normal. Once you've got that inversion, as I showed you before, you then get the turnaround. Let me just see if I can get this to, there you go. So you can see you come down and then you rock it back. And it's when you rock it back is when the recession takes effect. So not a problem there. So we're through there at the moment, as you can see, and it's just a matter of how the market reacts, or whether there's intervention by the Fed. Because on the previous occasions, we didn't have that. All of these other occasions, there wasn't as much intervention by central banks. So it could be different this time, but who knows? Who knows? But certainly something that we'll come back and keep an eye on. And then Bitcoin, this yesterday sideways to higher. Some selling around yesterday. We'll look at that in more detail in just a moment. We're still above the 200 bar moving average, and we're starting to see an increase in the trading range and the market turning around on the overnight there. In the 4 hour, you can see that prices just moved lower and are now returning. A bit of a sideways move going on here at the moment. But in the 15 minute, we're starting to get the momentum building now. We're trading $150 there and then back up to here. You can see why the signal failed here. The market came down, came to the 200 bar moving average. We see the buying pressure. We then see them buy back in here, and then the market reverse back above the 200 bar moving average, and then into a sell situation, some profit taking off the top. So from here down to here, you can see that we come straight to the 76% retracement, and once we break the 200 bar moving average with selling, the market moves low. We get a bit of a retracement here, but it's on low volume, and then prices move lower. However, on the overnight, the momentum is staying with this market, which is really encouraging. So we could see some decent trades out of this market going forward as long as this momentum remains. Currently it needs to close above the 200 bar moving average in the 15-minute chart. We're already above in the 4-hour and the daily. I don't think we are on the weekly. I don't think I've got enough data in there, or have I got the averages on? Let's just have a look, just so that we've got everything lined up. With the 200 bar is in there, but it must be insufficient data, so let's just see where it's hiding. No, there's not enough data in there to actually display a 200 bar moving average, but certainly even in this time frame you can see that we've got prices breaking out of the downside there. We just it's always good to look at the longer term picture. So you can see there again we've got that triangular formation there where the market's broken out and starting to move to the upside. What you would want to do in these longer time frames is to pick off this point here down to here and draw in 76% there, and then just keep working your way back up these highs if the market moves, and eventually you'll get to where towards the all-time highs, where the resistance will be 3/4 of the way up from the last move, and find some resistance there. But for the time being, 5.9 would be that area, and you can do the same in the daily chart. It's just easier to do it in the weekly chart there. You can see it makes it a bit more difficult. So this is why I have the longer and bigger time frames in the charts to look at, is because it makes life a lot easier. And that's why, even though obviously you're having to wait for a complete week's worth of data, it still gives you a very good idea. You can see there where the market broke out, and you can see where it's broke out here as well. You can see those long periods of consolidation and accumulation as well. Okay, that will do it for this one. Let's see what happens with the non-farm payroll figures today. It'll impact both the pound and the stock market. As I said earlier, there's nothing on Brexit, and Bitcoin starting to move quite nicely. Getting some nice bars in this now. The momentum's starting to build a bit. So let's see how that goes today as well. And with that, as ever, thanks for watching. See you in the next one.